Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, October 27th. It is 6:45 as I'm starting the video. And as always, please run your player at 1.25x. I think that's the best speed for playback. While I rattle off some stuff on the futures and earnings, why don't you get a pencil handy? I'm going to share some stuff with you. You might want to take a note or two. Anyways, equities are flat this morning. Bitcoin is off 5%. That's pretty substantial. Copper down 1.5%. That's going to hurt our Freeport trade. That's for sure. If you go to the copper charts, there's a double top the other day that's a little concerning. I'm still in the trade, but yesterday's action and now this morning's action is not going to be any help at all. I will tell you I saw some bullish order flow, short-term order flow into Freeport yesterday, so that was encouraging. On the macro front, we've got durable goods. That's always an important number. That's a monthly number. Comes out this morning at 8:30. We've got retail and wholesale inventories. We've got our oil inventory numbers at 10:30, and then at 1 o'clock we've got a 5-year bond auction. On the earnings front today, before the bell, we've got a pretty nice mix. Boeing, GM, Coke, McDonald's, Spotify, and there's a bunch of other ones. We're getting into the meat of the season, and there's just dozens and dozens. But those are some of the headline names. And then after the bell, Ford, Teladoc, Twilio, ServiceNow, and eBay are 5 that are reporting after the bell. And then, of course, last night we had Microsoft and Google. I think Microsoft is trading up a little bit and Google's trading down a little bit, but nothing. I don't get too excited about these after hours and pre-market moves in the low liquidity environment. Just wait till the big boys come on the field at 9:30. Once the cash market opens, then you can, once the liquidity picks up, that prices will find a real point of fair value once the dust settles from the amateur hour after earnings are reported yesterday. So, and that's one reason I very rarely play. I mean, I can't even remember the last time I tried to do anything pre-market or aftermarket in an individual name. Futures and all that, yeah, but not individual names, because most of the time it's a fake number anyway. So, anyways. Last night I sent out an email letting you know I made a blog post about the Tom Brady interview on his podcast called Let's Go. I got a lot out of that podcast, and it's 90 minutes. It's a panel discussion with renowned sportscasters. And, like I said in my note, I was expecting, inside football type talk. But I was quite delighted to listen to Brady, who I have not followed over the last 20 years very closely, other than just a superficial knowledge of, what he's doing on the football field. Not playing in a local market, you don't really get the morning shows and all that kind of stuff as you would in New England, so I really had no insight as to his personality and stuff like that. So I thought that podcast was very inspirational in terms of getting an inside look at one of the greatest that ever played the game. And what I found through the years in my study of GOATs, whether it's Stan Druckenmiller, Jesse Livermore, Jack Nicklaus, Tiger Woods, Michael Jordan, whatever it is, there are common threads that go through their life experiences that led them to the top. And I always find those studies to be not only quite interesting, but inspirational as well. I really encourage you to go to that blog post, get the link for Tom Brady's Let's Go podcast. And it's the October 26th edition. I'm sure if you go back in time, they'll be talking about the game over the weekend and stuff like that. That may be of interest to you, but I think the October 26th edition will be the most useful for your trading. Also, one of our members, Shabin, sent me an email asking which websites that I use for my pre-market prep, and I've got a handful of them. I shared those on the blog post this morning, so when if you want to, when you're reading through that, you can get the websites that I tend to gravitate to kind of pull factoids together for you. But keep in mind, and you're welcome to, there's no secret websites out there. You're welcome to visit them. But I'd like to think that if you're listening to this video now, you see value in having me do a sift for you to save you some time and to put out on a silver platter what I think are the most important things in the morning to be aware of for the day. So by all means, you're welcome to look at those websites, but don't have it be an activity trap pre-market when you're probably pressed for time a little bit and need to get your info together quickly before the bell. And lastly, and this is what I wanted you to take a note on. Yesterday, had a trader in the room lamenting that, wow, I always find myself exiting a trade too early, and then I exit, and then it races on to new highs or whatever, and you discovered that you got out too early, and then see the trade like run away from you. It's a real common thing. I've heard it for years and years and years from various traders. So a way to deal with that is twofold. Number one, when you get the urge to close out a trade, ask yourself this question: why am I exiting the trade? Why am I exiting the trade? And as you go to answer that question, it becomes very simple. Does your answer have to do with price, or does your answer have to do with feelings? Here's an example. My price target was hit. Fine, close the trade. My stop was hit. Fine, close the trade. But most often, what you'll find is I'm scared I'm going to lose my gain, or some other emotion that you're experiencing at that time, and it won't have anything to do with what's actually happening to the price. So for instance, you get a pullback and you see that, oh wow, I was just up, a certain number of dollars, and then I see this mean red bar that cuts into those profits, and then you rush to close that trade, and then the next bar is green because the first red bar, while it hurt your P&L, didn't have anything monumental in terms of the technicals. It didn't violate your support level. It didn't violate your stop. It was just a random bar. So what you've got to do in that moment when you start to panic and rush to close your trade, just ask yourself that question. Why am I closing the trade? And if it has to do with price, by all means, close your trade. But if it has to do with money or fear or panic, then don't close it. Another thing you can do is along the same lines. I want to close the trade. Set your stopwatch for 30 minutes. Let that 30 minutes go by. And if you still want to close the trade, then close the trade. And giving yourself, 30 minutes to let that fear pass or that emotion pass may keep you in trades longer, because the name of the game is to stay in winning trades as long as possible and to make price be the thing that takes you out. So I believe I actually did a whole blog post on this topic back in the day. I will dig through the website, find you a link, and when I find it, I will pass that link along to you. There may be some other tips in there that you can read about if that's something that bugs you from time to time, or something that you find happens quite a bit in your trading, and hopefully we can get that squared away. So let's dive into SPY. Nothing really happening on the US dollar, TLT rates, oscillators, all that stuff. No real changes. So I'm going to zoom ahead. SPY 2 hour. What happened yesterday was simply a gap up in the morning, and then they filled that gap in the afternoon. So didn't result in, it resulted in a flat day, but from a technical standpoint, we just had a gap up, and then they came back to fill that. And that's something, in your trading every day, when you get a gap up in the morning, mark your gap. And you may find out that, that first bar is a gap up, and then price drives a little higher throughout the day. But then in the afternoon, they come back and want to fill that gap that was left over in the morning. So, and then if you have your gap marked, then that can either be a point to get out of your long, like it didn't work out, right? You bought in the morning, and then they came back and filled that gap. When you see price go back into that lower gap and you're long and you're actively trading, it's time to close it out, because the default position is once you go back into a gap, you're going to fill that gap, whether that's a gap above or a gap below. So anyhow, that's what they did yesterday. So I think right here, as we sit at 456, that's a perfect pivot for you to use today in your active trading. And then you can see the levels both above and below that you can use as reference points. And one thing I did today, and I want to remind you of, keep in mind the regimes of your indicators. For RSI, anything above 50, RSI is operating in its bullish regime. With PPO or momentum, anything above the zero line is bullish. So you can see here that Price is rising. Both indicators are in their bullish regimes, which is supportive of higher prices. The only thing that I would point out and ask you to look for as well when price is rising is be aware of any emerging bearish divergences. And in this case, we do have that, right? We have price rising, but we have momentum and RSI falling. And that's something it's not a sell signal, but it's a warning flag. So if you were to see, price break down from 456 and then come and break down 454 and start rolling over, that's your bearish divergences starting to take effect. And so you just need to be aware of that and put that into your little trading narrative of how you're going to handle price. But in general, when you have your indicators in the bullish mode, then you should be leaning towards bullish trades instead of trying to short everything. Because if you're in bullish mode and you're trying to short, you're obviously in a counter trend trade. You're saying, okay, well, I'm going to get cute and I'm going to short this, and then it's going to come down to 461, and then it's going to reverse, blah, blah, blah. That's fine, and it may happen. If you get a trend line break and you lose support level, you can short it. Just remember that you're in a counter trend trade that is apt to reverse. Moving on to the Qs. Real simple here, 378. As long as we're above 378, I think bulls are in good shape. I wouldn't want to really explore losing this midpoint and then going down to the bottom of the channel. That would be a little painful if I was sitting there with a long position. So I think 378 is a great level for your active pivot. And then here you've got the same basic uptrend line on the 30-minute chart, showing you some granularity. Here again, you've got rising momentum. With momentum in its bullish regime, you've got a series of higher lows on RSI, with RSI in bull mode above 50. So I think the preponderance of the evidence is stay bullish here, and then see how Microsoft, Google, and then Apple and Amazon act on Thursday and Friday. And then I think we'll know a lot more. We'll have a lot more evidence by the end of the week, early next week, as all these FATMAAN names report. For the simple fact that they represent so much market cap, that if all of FATMAAN is stable or rising, it's tough for the market and the Qs specifically to take a major nosedive. IWM, disappointing day. Why? Well, we broke above this 229, which was a prior high. I was looking for a breakout above 230 to open up the door towards 232.5. Didn't get it, pulled back. So now today, your pivot is 228. I think you can be long above that, but as long as it's below, I think it's vulnerable to come into 227. And then if that doesn't hold, come all the way back to the midpoint of the range, which is down at 225, 224. So kind of a stinky day. And you can see it here that it just, after that little push, above 230, it failed and came right back down. So you've got some pretty clear levels there where you can actively trade. And what I wanted to show you on Facebook, of course, it reported on Monday. So yesterday was the first big day of trading after the earnings call, and you can see that traders really did not like it, down 4%, and at the close of the day had a little kickback. Now, what I wanted to show you is kind of getting back to what I was talking about before with counter trend trades. Facebook's in a downtrend, right? So if you're trading the hourly chart, what you've always got to be aware of is what's happening on the next time frame up. So if I'm trading the hourly, I always want to be aware of what's happening on the daily. So on the daily, we see RSI, bearish regime, PPO, bearish regime, and even setting up with a bearish cross below the zero line, and that is usually death might be a strong word, but not good. We'll just leave it at that. Whenever you get a bearish cross below the zero line, that is usually an indication that it's going lower. So we had a big downtrend, we had a kickback rally, and now we gapped lower and have moved down to fresh lows. So that's bearish. So getting back to the 60-minute chart this morning, if you get a break above 317, yeah, you can take that long. Maybe you get a kickback all the way to 322, but you're in a downtrend. This looks like the start of a bear flag. Give you one or two green bars and then pull the rug. And then that's your A, B, C move. Does that happen? We'll have to wait and see. But just from a technical standpoint, you just need to know that while a move above 317 is bullish in and of itself, and you're welcome to take that long, just remember you're in a counter trend trade, and chances are that move will reverse. And then, of course, well, how do I know when and where to look for that reversal? What you should be doing is on this move here. In fact, I'll do it for you. Let's do this. All right. You drop in your fibs from high to low, and then here is your Fibonacci bounce levels. Notice that the 38% level coincides here with technical resistance from this low. So that's a really important spot. It could reverse right here this morning, right here, right now. Here's your 50% half back short, right? Your first move is down. Here's your half back entry to get short if you're not short already. And then here's your 61.8. And how I would handle that if it bounced all the way up here is I would line up that 61.8 retracement with the technical resistance, and I would use that little area there as a reversal zone. So what you could do, let's just say you got long here and it carried you up to here, you would be saying to yourself, okay, I'm going to take my quick profits from my long, and I'm going to play for a fade after the 618 retracement and this big level of resistance. So I can get short with a little stop above and then plan on the C leg down from this A, B, C structure. And then that's how I would play it. And if it decides, okay, that was it, then all you can say, when it moves higher, all you can say is, I was wrong, I got stopped out, etc. So, anyhow, the whole point of the discussion is always know whether you're in a trend trade or a counter trend trade, because your mental approach has got to be totally different. Okay, Apple, nothing. More consolidation. You've got clear levels there. If things start to happen between now and when they report Thursday after the bell, not a lot to do or say while this thing is going to sleep or in suspended animation before its earnings. Just set yourself some alarms at where you would be interested in case Apple decides to, like, oh my God, we're going to go on this epic bull run into earnings, or if something were to happen and it start to sell off into the print, you will have levels there where you can get notified where you may want to get in on the trade. But, as it sits here, this type of action is, time decay, burning, right? You get a short term, you're trying to actively trade it short term, and you get yourself some calls or something, and then it doesn't do anything for days and days and days. So you got to have that aware in your trading. And so once you see this, then you set up your range and set your alarms above and below, and try to catch the move as it's happening rather than just waiting for something to happen as the value of your options, start to fade away. Tesla. Okay, very interesting day yesterday. Let's go through it. If you'll recall, and if you want to go back to yesterday's video, you can see this. I had my Fibonacci levels from 1040 down to the swing low. 1040 was the high of, what would that have been? That was the Monday high, right? So I put my Fibonacci on. Well, that whole Fibonacci thing was invalidated with the first candle of the day. Why? Because it, rocketed up here. And so if you take out the prior high, that's bullish. So when you drop in your Fibonacci's, you're looking for a retracement. And once the prior high was taken out, whatever Fibonacci you drew needs to be taken off the board and erased because it's invalidated. So we reached a high, and then they reversed it, got overbought, people taking profits, and then they brought it down. So what do? You just move your fib levels up to the new high. So now we go from the swing low down here to the swing high, and now we find, and it's not a coincidence, that price is sitting on the 38% retracement level. So that is your pivot this morning on any active trades. If we drop below 1020, your next level is 995, and then the next level below that is 971 for a 618 retracement, and then your level below that is the top of the opening gap at 945. So this gives you objective levels to look for a reversal if we go lower, or if it looks like we're stabilized, you can either get long at 1020 or wait for a breakout above 1040. And if that were to happen, then your target would be 1090 for a re-ramp to test the old high. Microsoft up this morning on earnings. I think 311 will be a good pivot. Just remember that, you know, if the pre-market action holds, that there'll be a gap below, and that they may come down to fill that gap quickly, or just leave it. But just be aware that if it's trading up this morning, there'll be a gap below. But I think it's going higher, and I think 311 you can see is building out a nice level of support here. And I think as long as you're above 311, the bulls are definitely in control. Amazon. We talked about this one yesterday morning, and then we got a big move, a gap up and a run up to 34.15, and then they reversed it and came back down. In fact, this was a topic in the trading room yesterday, and you know, I didn't plan this out, but here's another Fibonacci example. If you saw Amazon rocket higher and then start to pull back, the question in the trading room was, where would be a good spot to try a long? And the answer usually is at the confluence of technical support and a Fibonacci pullback. So let's look at the chart. So we had a level here at 3380. We had the top of the gap. Those would be locations where I would be looking for a reversal. But if you drop in your fibs, you can see that, well, number one, the 38% retracement level coincides really closely to this 3380 level. So I might have been looking for a reversal there. And what you want to see is a stabilizing candle. What is that? Well, it's not a big red candle, that's for sure. Usually what you'll find on a reversal is a couple of bars where they try to take it lower, but there's responsive buyers. You didn't see that there on this big bar. Now, what's the next level? Well, it's the 50% half back long, and that is right here, right at this 3360 level. And you can see that on the big red bar, they took it down, and then it was bought up. And then on the next bar, they tried to take it down again. You can see the wick below. It wasn't a big wick, but it was a wick. And then they brought it right back up to the level of the prior bar, and then starting to move higher. So that half back long, that 50% fib, is a level that you always want to pay attention to. And if you see price stop on a dime at a 50% fib, and then you get a confirming candle on the next one, then you've got yourself a nice line in the sand to shoot against on your active trade. Now this morning, you've also got a nice level here at 33.80, because you see that there were 3 candles. This one, the last 3 candles of the day. This was a reach up to 33.80 that got pushed back. The next candle went up to 33.80 and got stopped. And then the final candle of the day made a try for a breakout, and then they sold it back to 33.80. So that's your pivot for today. A break above would favor 34.10, 34.15, and if it gets rejected, then you may come back down here to 33.45 at the top of the gap. Google, right here at this big gap. We'll see how the earnings go today. We've got a little gap below that you need to be aware of as well. So gaps above and below price are going to kind of determine the short-term direction. Which one of those is it going to try and fill first? Netflix. We had the big breakout. We found a high up here at 675, and then we started coming back. You've got a technical support level at 660. I think if you were not in it and you got to pull back to 660, where you've got this emerging volume over price shelf, I think you can use 660 as a pivot, as a long entry area. And if it just goes up higher, then of course all-time highs you got to buy. If you get a breakout above 675, I would be a buyer there with a stop just below, because then again you'll be in blue sky territory with no natural sellers in a bull market, and that's when you want to be long. Semiconductors, more or less the same kind of price action as SPY. Gap up, morning gap up, test gap resistance, come back down, fill the morning gap. So basically a nothing day. You've got a pivot right here at 270. I would certainly stay long against that and look for a move that fills this gap and moves up towards 274.50, 275. I think those are your overhead targets. If you lose 270, I would imagine you'd come back to 267. So that's the way I see it. Make note of those levels if you're going to actively trade them, and see how it goes. So if you're new to the channel, I hope you appreciate getting the color, the levels, my thoughts on different trading situations. I hope it adds to your trading experience, and I hope the levels help in your active trading. And if that's the case, please hit the subscribe button, the alarm bell, the like button. Those are all things that I'll really appreciate. Then you'll get notified of all the content that I publish on YouTube. If you want to take the extra step, jump over in the show notes where you'll find a link to add your name to the team. It takes 5 seconds to drop your email in, and then that way, like last night, you would have gotten that email on the Tom Brady podcast. So morning, noon, or night, whenever I send something out, you'll get it right in your email box, and you won't have to rely on me mentioning it after the fact or going to hunt for it. It'll be right there in a neat package waiting for you whenever you've got time to look at it. And of course, longtime viewers, I really appreciate your support and passing my link along to help grow the channel. So have a good day of trading. Let's see how Microsoft and Google handled their earnings last night, and let's get ready for Apple and Amazon tomorrow. So have a good day of trading. This has been Chris Bus with Traders Profit Compass. Talk to you next time.